I'm Mike Alkin here with Amir Adnani, CEO of Uranium Energy Corp. And we're here to talk uranium. Amir, we have just gone through the last 6 months of some really positive news.
Yeah.
We have seen Cameco have a big production cut. Kazatomprom, the largest player in the world, by a factor of 2, production cut. ConverDyn, the converter, cut. We've seen the French say we're not going to go from 75 to 50% in any reasonable time frame. Abe gets reelected. We've seen a lot of positive stuff take place in uranium, yet uranium is about the same time it was last 6 months. What's going on?
Everything you mentioned is correct, and at the same time, I think represents a turning point for the fundamentals of the market in a positive way. I think for the first time we can see that the supply of uranium will come off compared to where it was a couple of years ago in terms of supply from mining.
Right.
We're expected to see about 140 million pounds of production this year in 2018. That number was closer to 160 million pounds a couple of years ago.
Right.
So the trend is definitely in the right place. Demand is projected to be about 185 million pounds this year. Of course, secondary supplies will fill that gap, but it may be just enough, and so we may be just in a balanced market.
Right.
From a market that everyone was expecting still to be somewhat oversupplied this year. Some numbers that I've seen even points to the fact that we may see a slight supply deficit this year.
Mine would be one of those numbers.
Yeah, okay, there we go. So there's one right there, and that's a good one. And you've really done a great amount of work in covering the sector. But to come back to your question, I think investors should always recognize that the uranium market and uranium prices are always going to lag fundamentals. And the simple reason is that uranium, unlike, let's say, gold and oil and copper, it's not a very liquid market that trades on a liquid exchange on a daily basis.
Right.
If you wanted to check the price of gold, it really does change on a minute-by-minute basis.
Yeah.
The uranium price gets published once a day.
Yep.
So that right there tells you the story, that this is an illiquid market. A lot of the uranium buying will happen by way of long-term contracts, as much as 90% of the market. And those buyers, those guys, the utilities that are looking to sign those contracts, which is going to be the driver of price,
Right.
are right now sitting and thinking. And they're really thinking about, okay, these cuts, what do they mean? And these are not the quickest buyers to jump in a market.
And they don't need to be, because price isn't that important to them,
That's right.
Yeah.
Exactly. So I think it, as much as it would be nice to sort of see these very positive fundamentals that have taken shape, especially the sharp production cuts, it would be really great to see an immediate price response. It's just, I don't think the nature of the uranium market, but at the same time, it doesn't change the fact that these positive fundamentals will shape the uranium price with upward trajectory this year and beyond. And like you said, at the end of the day, the uranium price makes a very little difference to the bottom line of a utility or an end user.
Right.
And so I don't think in any way it's going to be a deterrent from them wanting to buy. And in fact, if they're making purchases at higher prices, it won't make a difference.
When we talk about making a difference, I'm not so sure the uranium price makes a difference to you, because you have been a real astute buyer of distressed uranium assets and have been able to accrete value. Right, so when you issue stock, it's with very little dilution, but yet you're building big resource. Can you talk about your view on acquisitions, where you've come from, and how you view the market now?
Well, we've been extremely counter-cyclical or contrarian in our approach. We've definitely viewed this downturn in the uranium market as an incredible once-in-a-lifetime kind of opportunity to buy assets, especially ones that fit our profile for future development and production. So these low-cost in-situ recovery projects. So I've been a bit like a kid in a candy store, you know, just being in this situation where I view the distressed nature of the uranium market as a great window to buy without too much competition. We've demonstrated that year in and year out, including last year in 2017. Making 2 announcements of new acquisitions in the state of Wyoming, where we previously didn't have a meaningful presence. Now we have one of the largest presence in the state of Wyoming of a fully permitted project, our Reno Creek project, with large resources, large land package for future exploration upside, in a uranium mining friendly state. So these are the type of assets that trade at huge premiums in a better uranium market. I mean, to be on US soil, to be in a mining-friendly, uranium mining-friendly state. These are premium type of transactions to be able to do, but with distressed pricing. So, you know, I kind of really feel also, Mike, that this has been a positive attribute for UEC share price, in the sense that as we've demonstrated these accretive asset purchases, despite the uranium market going down, the uranium price going down, our share price has performed relatively okay. In that, you know, in the last couple of years, we've moved up nicely, and I think the market recognizes that, hey, Uranium Energy, UEC, is not throwing away its resources at the bottom of the cycle. We're not depleting resources at the bottom of the cycle. And instead, we are growing resources at the bottom of the cycle. And even though this might sound basic, that, hey, everyone should be doing this, 99% of the market isn't doing that.
Right. So you're okay with it where it is for now?
I'm okay in the sense that I would be, and maybe some of my investors don't want to hear this, but if the uranium price stays where it is, it gives me a chance to continue making accretive acquisitions. I've been building Uranium Energy Corp for 13 years, so clearly my timeline might be slightly different than the timeline of an investor.
You have a lot of skin in the game.
But I have a lot of skin in the game. And if you're in it for 13 years, you're not thinking about the next 6 months. You're really thinking about, do I have the foundation in place to lead my sector, lead my sector higher? And the way I think about the sector that I want to dominate, I want to be the dominant player. I want UEC to be the dominant player in US uranium production. And I believe already we have the assets in place to lead US uranium production higher. But I feel like if I had a bit more time, that wouldn't exactly be a bad thing. And I'll make the most of it to get even stronger in terms of that asset base. But yeah, so look, if things turn, we're in a strong position to quickly ramp back into development and then production, and ramp that production higher. And if things stay where they are, I think we've demonstrated now that we are astute and capable of not only navigating the downturn, but creating value in the downturn.
So you just mentioned two things, assets and US, those two words.
Right.
And when I think about UEC, I first want to touch upon assets, because there are assets that are obvious, the ones you bought, paid a great price. But then there is an asset that's hiding in plain sight that I think does not get the attention that is warranted. And that is part of being acquiring a very good asset at a very good price that could be worth the market cap of Uranium Energy Corp, absent all the uranium. And that's the titanium project. So why don't you talk a little bit about titanium and the project itself? Well, you know,
what's that saying? It's sort of like luck favors the trained eye or something like that. Well, you know, we were, it sounds like we got lucky, but you know, just to step back and not to digress, but quickly, you know, about 6 years ago, me and my team sat around the boardroom at one of our strategy meetings, and we thought, geez, where outside the US can we go and acquire projects where maybe the permitting timelines could be shorter? Because that's something we really deal with in the US. Permitting takes too long. So what's that?
For now.
For now. And geologic settings that we're interested in are these ISR amenable projects. And we identified Paraguay as one of the least explored countries in the world. And South America in general is very lightly explored for uranium. And there was ISR potential there, meaning similar geology as South Texas. So 5 years ago, we made our first acquisition in Paraguay. We set up a team, a country office presence and everything. And so now we know the country. A year ago, an opportunity comes up. Luck favors the trained eye. So we're in the country. We now have an understanding of the geology and government relations of the opportunities. So we knew that the world's largest development stage titanium project is in Paraguay. You can't miss it. It's like you arrive at the airport and the first thing you learn about in Asunción is this deposit. And there was a real crash in the titanium prices in 2015. If you remember, the whole base metal complex really went down in late 2015, early 2016.
And for those who don't know, just explain what titanium does.
Titanium, surprisingly, only has one main application right now. 95% of it is being used as pigment in paint. And there's all sorts of things that will drive demand expansion for titanium. But today, what we're looking at here is in 2015, when the entire base metal complex basically crashed, we saw an opportunity for less than 1% dilution to acquire an option to later exercise that option and acquire this asset because we felt it was too big of a deposit, too important not to pick up for such a small price.
Right.
Late last year, with titanium prices staging a massive recovery, when we acquired the option, it was $50 per ton, titanium oxide.
Yep.
When we exercised the option late last year, it was $170 per ton. So we've now issued a 43-101 resource report on the project that shows this is one of the largest undeveloped resources, high grade, in the world. And I think it's going to be an important value driver. We'll see what kind of value we get for it because we plan to monetize or perhaps spin it out.
Yeah, I was going to say, let's talk about that.
I think you'll see more news flow around this year. I think you'll see that we're going to systematically unlock that value by building a team around it. We're going to keep this all low cost because our 100% focus is on uranium.
Right.
But I think if you're a UEC shareholder, you should pay close attention to what we're doing with this asset because I think it can unlock tremendous value. I can't put a number on it. I know you've looked at it and think it could have quite substantial based on your comment just earlier. And look, I agree with you, but I want to demonstrate to our investors and to the market systematically how we're going to unlock this. This will be a 2018 story for UEC. And look, it's nice. It gives us yet another key commodity that we have as in addition to our main business, being the uranium business.
So you've got an asset that's hiding in plain sight, and then you're in a geography that has a lot going on right now from an energy security standpoint, but also some potential catalysts with regard to being a U.S. uranium miner. So we have 50 million pounds of uranium used by U.S. nuclear power facilities, plants. We produce 2.9. We import 95% of that, 40% from the Russians, Kazakhs, and Uzbeks, 60% from Russian friendly. That's a risk to energy security. When you consider nuclear power is 20% of the electric grid.
Right.
It's mind-boggling to me that it has taken this long for the administration to even think about it. So talk about what's going on, where you think the administration's head is, and if you could put some time frame around that.
Well, it's all the numbers you mentioned are correct. I think it is mind-boggling. I think it's a matter of national security importance and relevance. And I'm not the only person that thinks that. As you know, the chairman of our company, Spencer Abraham, is the former United States Energy Secretary. And he tells me that when he was Energy Secretary, they thought it was a national disaster that the U.S. was importing 60% of oil requirements. And now it's 98% of uranium requirements are being imported. This is not sustainable. And I believe that the federal government at the state level and various other agencies are really looking at this issue and thinking about the best way to address this dire situation. It really is unsustainable. And I think investors should pay particular attention to the opportunities within the U.S. uranium sector. And that's where, again, I go back to what we've done with UEC. And Mike, we not only have the assets in place that are fully permitted on U.S. soil with infrastructure at our Hobson plant, but we have the team. No other company in the U.S. has a former U.S. Energy Secretary as chairman to guide the way at a time like this. Our executive VP, Scott Melby, who is the former president of the Uranium Producers of America, our technical team who've worked in U.S. uranium exploration, permitting, mining, and our proof of concept. We operated as a U.S. uranium miner. We've explored uranium deposits, discovered uranium deposits in the last 5 years in the U.S. So I really believe this is the complete package. And I agree with what you said about the U.S. national security issue. It's another key story unfolding in 2018.
Great. Thanks, Amir.
Thank you, Michael.